JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 21st of July 2020, so yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as usual, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now, jumping into this figure, so we had a bit of a slowdown, so that's great in terms of total amount of cases. However, as you can see, the problem is still there. So, yep, we are slowly getting closer to that 15 million mark, unfortunately, but it is what it is. So let's see how the market is reacting. But the market is taking everything still positively. So, looking at Nikkei here, for example, the index closed today in the positive territory, and but failed to kind of move above the last week's high near the 22,965 zone, roughly around there. So in a way, we need to see a nice good pop above that in order to kind of aim for some higher levels. But of course, they are slightly above that. We do have this highest point of June, which also could be in the way a little bit here. But if that breaks now, this is where more buyers could be joining in, because such a move would confirm a forthcoming higher high. And the next, then, yep, we could aim for some higher levels. For now, yes, the fact that we had a nice rebound here from this short-term upside support line taken from the low, the 15th of June, that's great, that's wonderful news. But yep, these confirmation breaks are still needed here. First, of course, a break above the last week's high near the 22,965 territory, and then yep, we can go further. Now jumping into Shanghai Composite, so this one is trading in slightly in the positive territory today. Yesterday I talked about this index, and I was saying that in a way, for us to maybe start looking at some higher levels, we would need to see this one pushing above the 3,336 territory, which, as you can see, today acted as a very nice area of resistance. Now let me just remind you what that level is. And for this, I need to go back into 2018. Basically, that's the highest point of March. It's also the high of the 26th of February, but also at the same time the highest point of March. So, so yep, basically for now, this area is acting as that good resistance level. So keep your eyes on that one. If we eventually do get a nice break above it, and we do see the daily candle staying above it, then yes, higher levels could be met again. We could start looking at the highs of last week near the 3,457 territory. We still have about 55 minutes left of trading in Shanghai Composite, so let's see where this candle is going to end. But as it has been proven that in the last kind of hour, Shanghai Composite tends to kind of really do some good moves, and eventually kind of sometimes it might even change the whole outlook, but in the last hour. But again, like I said, let's not get ahead of ourselves. First, let's keep an eye on this barrier. If by any chance the index manages to get a daily candle above the 3,336 territory, then we'll aim for some higher levels here. Until then, yes, there is a possibility still to move higher, but we're probably a little bit on the cautious side and on the neutral side. So on this one, on this particular index here. So yeah, let's keep an eye on this one. Of course, don't get me wrong, the fact that we managed to get a nice rebound from the 21-day EMA here, that's wonderful. But let's, again, like I said, be very careful. Now Now jumping into German DAX. Now DAX closed nicely above this barrier, above the June high yesterday near the 12,913 zone, and it closed kind of also above the psychological 13,000 level. So basically all this is kind of working out nicely right now for the German index. And what we're going to do here is, of course, we're going to aim for this 13,236.37 zone. I talked about this one yesterday, and that's the high of the 24th of February of this year. So keep your eyes on that one. It could be a nice target, but slightly above that, we do have even a better one, which is the high of the the low of the 21st of February near the 13,500 level. Looking at the cash index right now, we can see that the index is accelerating nicely to the upside, and yep, it's currently balancing near the slightly above the 13,200 zone. So basically we're just not far already from testing this area. So basically we'll have a nice opening gap here to the upside, so keep your eyes on that one, guys. The FTSE 100, this one's a little bit more on the modest side, however still kind of showing good signs of willingness, of moving higher. Well, basically what I was saying previously, that I need to see a nice big push above the 6,342 territory before getting comfortable with some higher levels. The price right now on the cash index is currently balancing near the 6,306 zone, slightly above where it has closed yesterday, and closer to this barrier basically. So of course, like I said, let's keep an eye on it, and if we do get a nice pop above it, and ideally a daily close above it, then that's wonderful, good news for the buyers. And the next target for us could be around here near this 200-day EMA, which is not far from the highest point of June, which is around the 6,512 zone, and slightly above that we do have that other 6,536 territory, which is, and let me just quickly show you what I'm talking about. This is the lowest point of 2018, guys. So basically very nice area of resistance right here, but again, in order to consider a move towards that area, we need to see a nice good break above the 6,342 mark. Now gold is interesting, very, very interesting. So basically yesterday I talked about this range here for you guys to keep an eye on, and as you can see, the commodity is now testing the upper side of this little range near the 1818 level, which is the high of the current highest point of July, or actually no longer the highest point, but it was the previous highest point of July. So the commodity now is testing that area. It's slightly above it, but to be honest, we're not gonna take it as a positive yet, because we would like to see at least a daily close above this area before kind of considering a further move higher, because for example yesterday we had a violation of this 1818 zone, but as you can see, the daily candle was not able to kind of close above it, so it just fell shy, just slightly below it, and kind of closed there. So today we're seeing another attempt to move higher, so let's see if the bulls manage to do so, and that we're not really going to get something of a false breakout here to the upside. So if we do see something like that, then yep, we'll remain neutral, unless the price starts falling below the 1796 territory. But again, for now, it seems that the downside could be slightly off the table, but yep, as I said, we need that daily close above this 1818 zone. Now jumping into DXY, I talked about this one yesterday, and yesterday the 895.72 territory, which is the lowest point of June, continued to provide decent support, and as you can see, it held the price from moving lower. Today we're seeing a bit of a violation of this area. However, the index still remains, continues to balance around and float around this level, around this lowest point of June. So what I was saying previously, that we need to see the same daily close below this area in order to aim for some lower levels, because we don't want to see a false breakout here, guys. So again, for now, yes, there is a possibility for this one to move lower. If it does, then this would confirm a forthcoming lower low, and the next target for us could be the lowest point of March, and at the same time the current lowest point of 2020 near the 94.65 zone. Jumping into Bitcoin, Bitcoin is a bit of a mess, so let me actually just remove all these lines, guys, and let me just kind of start from the beginning. Now, of course, as you can see from the bigger picture, the crypto is kind of still moving below this. Let me just drag this one right here. So it's still moving below this downside line taken from the highest point of December 2017. So in a way, as long as this downside line stays intact, then yes, there is a good likelihood that this crypto might stay on the lower side, on the lower end here. But as you can see, from around mid-March, the crypto was moving higher. It managed to recover somewhat, but now the crypto seems to be coiling up here a little bit. So, which means that it could be preparing for a possible kind of breakout here. Again, that's the idea for now. But again, keep your eyes on this little kind of pattern. But as you can see clearly, yep, looking at this daily chart, the crypto is a little bit coiling up. So wait for that violation of one of these lines, and then kind of start looking at the for the next directional move. But again, for now, like I said, we cannot really do much, and yep, we'll just wait until we get a break through one of these lines. Now, jumping into USDJPY, this one's moving perfectly to the upside. Now, yesterday I talked about this pair in my trader's tea time, and I was telling you guys to keep a close eye on the on this barrier right here, the 75.16 mark, which got violated yesterday. And the most important, we had a nice daily close here above this area, and as you can see, this is the result that we're having right now. This pair is pushing higher. It's making its way further north, or at least trying to do so. So let's see if the bulls are able to kind of lift this one towards the highest point of June here, near the 76.79 level, approximately around there. And if we do see a move towards that area, then we'll take it from there. Because of course, if it breaks this, then yes, this would confirm a forthcoming higher high. But if it struggles to do so, if it struggles to move further north above this barrier, then we may see a bit of a correction to the downside. But again, for now, from the very short-term perspective, yes, we are leaning a little bit more to the upside on this one. And for now, basically, we will, like I said, we'll target this highest point of June. If this upside line gets broken, as you can see, this one taken from the low, the 2nd of April, then, well, I mean, lower levels could be met, especially if the rate falls below the low of the 10th of July here, which is approximately around the 74 mark. So a nice good drop below it could, yep, open the door towards slightly lower areas. Now jumping into US dollar against the Canadian dollar here, and here, as you can see, I've mentioned this one a lot of times already in my previous videos, and I was saying that keep your eyes on this little range where the pair is currently stuck in, and that's roughly between the 1.3488 and the 1.3624 levels. So initially it seemed that the pair wanted to get closer to the upper bound of this little range, but you can see now the rate is reversing lower, and it's getting closer to this lower side. And so let's see if we get a break below it or not. If we do see a break and we do get the daily candle kind of staying below it, then we'll then target the lowest point of June near the 1.3314 level. Good potential area of support, but again, in order to consider that, we need to see a drop below this support zone near the 1.3488 zone, which is at the same time the lower side of this little range. Now GBPUSD, so the pair is moving nicely to the upside. This is what I talked about yesterday in my morning video, and I was saying that for now we will take a bit of a let's say, neutral stand here, but if it starts pushing above the 1.2669 zone, then there is a possibility we could see a further move higher, where the next target could be the highest point of June near the 1.2813. So this is what's happening exactly right now. So the pair is making its way above this key resistance level, which was well, already previously the highest point of July, nearly 1.2669, and the next, like I said, for now, it seems that the bulls are willing to kind of push this one higher. Of course, don't get me wrong, let's not get ahead of ourselves too much, because in a way we could see this one pushing a little bit higher, failing to move further north here, and then reversing, and then let's say closing the daily candle below this 1.2669 zone, and kind of then we will get ourselves a nice false breakout. But again, so this is a bit of let's say speculation, but again, for now, guys, be very careful. Of course, yes, everything's at the moment, everything's leaning a little bit more to the upside, and if it does move further north, then yes, the next target for us is the 1.2813 level. Jumping into another very interesting pair, and I've talked about this one yesterday in my morning video and last week as well. Basically the sorry, not yesterday, but last week, the euro against the Singapore dollar. Now here you can see that finally this barrier got broken, the 1.5869 zone that I talked about, and that was the highest point, well, that is the highest point of June, and the pair is now making its way towards, it seems like it wants to make its way towards the highest point of March, near the 1.5970 zone. So let's see if we can reach that area. And the most important, let's see if this area will actually eventually hold the rate from moving higher. Again, for now, everything's leaning a little bit more to the upside here. The fact that we continue to balance above the June high here near the 1.5869, that kind of adds up a bit of positivity, but in case this suddenly starts moving back down and falls back below the 1.5869 territory, then we'll aim for some lower levels, but we'll class that move lower as a temporary correction, because well, because we have this upside support line taken from the low of the 7th of May, which could still provide decent hold up here for this pair, and the bulls could step in somewhere around here. But again, we'll consider such a scenario if we get a drop below the 1.5869 territory. For now, we're leaning a little bit more to the upside towards the 1.5970 zone. And finally, EURUSD. So this one managed to end the day above the June high, which is around the 1.1422 zone, and yep, today we're seeing a further push north. Our main target is the highest point of this year, the current highest point of this year, near the 1.1496. We want to see if this level is going to hold. If it does, then we may see something like this. You can follow the arrow here. We may see a bit of a correction back down towards this upside support line taken from the low, the 14th of May, and then yep, a nice rebound could kind of open the door towards some higher levels again. But again, for now, this is just a bit of an idea. You can see that it's a little bit on the difficult side right now, because yes, there is still a chance for the euro to move further north, of course, but given that it recently already had a decent rally, maybe a bit of a correction could be possible. But again, that's why we're probably going to take a bit of a cautious approach here, because there could be a correction, but the correction might come after we get a test of this the current highest point of this year, near the 1.1496 level. So keep that in mind, guys. Now, in terms of the downside on this one, well, we would prefer to wait for at least a drop below the below a break of this one upside support line, and a drop below the 1.1325 zone, and then we could aim for some lower levels. I might adjust this area, this potential breakout level, after which we could consider the downside. I might adjust it a little bit later, depending on how this performance will happen here, because if it continues to accelerate, maybe we'll start lifting our possible breakout our level to the downside here. After a break of which, yep, it could move further further south. But again, for now, if it does correct lower, it still could be seen as a correction because we are still trading above this upside support line taken from the low of the 14th of May. So keep that in mind, guys. But again, how you could play this one out, for example, today is that if this June high continues to provide decent support, as you can see already this morning it did so. If it continues to provide support, then yes, there is a good chance we could hit the current highest point of this year, near the 1.1496. But if the rate suddenly starts falling back below the June high, then maybe a bit of a correction here to the downside could be possible. So that's why keep your eyes on this one, guys. Keep your eyes on some of these levels. Could be quite interesting, but again, for now, let me just probably mark this June high very quickly. Probably it will be quite useful to have it here as highlighted, and yep, this is going to be the level that we're going to be keeping a close eye on right today, and going further going further this week. So I hope you found it useful, guys, and thank you very much for watching and listening. I really appreciate your time, guys, and really it means a lot for me. So I hope you hope you found it useful. So if you want to catch my video later on, my trader's tea time is always 13:15 GMT. For now, guys, I hope you have a wonderful trading day, and I'll see you later. Thank you very much, and bye-bye.